Learning Objective 5 is to prepare a schedule of cost of goods manufactured. The schedule of cost of goods manufactured contains three elements of cost previously mentioned. That is our direct materials, direct labor, and our manufacturing cost. The purpose of the schedule is to calculate the cost of raw materials, direct labor, and manufacturing overhead that's actually used in production during a particular period. In addition, it's used to calculate the manufacturing cost associated with the finished goods inventory and work in process inventory in a given period of time. Again, we want to take all of our manufacturing costs incurred during a period and either allocate it to cost of goods transferred out or to ending work in process inventory. At first glance, this schedule of cost of goods manufactured can feel a little bit complex and intimidating, but in reality, it's quite simple and logical. It contains the three types of product cost that we've already discussed: direct materials, direct labor, and manufacturing overhead. Our raw materials cost isn't simply the cost of raw materials purchased during a period. Rather, it's the cost of materials used during a period. Raw materials purchases during the period are added to our beginning raw materials inventory to get raw materials available for use in production. Then we simply subtract our ending raw materials to get raw materials used in production. You might have noticed this looks a lot like the cost of goods sold section of our merchandising company or our manufacturing company, where we have beginning merchandise inventory plus purchases gives us goods available for sale, and then we deduct our ending inventory to calculate our cost of goods sold. And you can see the similarity. Our beginning inventory plus purchases gives us materials available for use. We subtract our ending inventory to give us our raw materials used in production. After we've calculated the raw materials used in production, we take that amount and add to that our direct labor costs and our manufacturing overhead to get our total manufacturing costs for the period. The next step is to look at our work in process inventory account. It is set up again just like our raw materials account. We have a beginning work in process inventory. That was anything left over from the prior period. We'll add to that our manufacturing costs. That's our direct materials, direct labor, and manufacturing overhead to get total work in process for the period. We'll then subtract our ending work in process inventory to calculate our cost of goods manufactured. So again, anything we start with plus cost that we've added needs to equal our ending work in process inventory plus the cost of any goods manufactured or transferred out to finished goods inventory. And looking at our finished goods inventory, we can see that our costs that were transferred out are again just like our purchases for a merchandising company. We would take our beginning finished goods plus anything we added, which in this case is our cost of goods manufactured. That gives us the cost of goods available for sale. Finally, we deduct our ending finished good inventory to get us our calculation of cost of goods sold. This is the same cost of goods sold section for a manufacturing company that we looked at earlier. Beginning finished goods plus costs of goods manufactured gives us goods available for sale, and that either needs to be transferred out or sold, or it's left in ending finished goods inventory. Let's recap and look at an overview of costs in our manufacturing company. This will better help us understand how product costs move through the various accounts and how they affect our balance sheet and our income statement. The first thing to notice is that our manufacturing costs flow directly to our balance sheet, and they'll stay on our balance sheet until we actually sell our finished goods. At that point in time, the costs are matched with the revenues they generate and reported as cost of goods sold on our income statement. On the other hand, our selling administrative costs, which were period costs, recall, flow directly to our income statement. Let's begin by looking at raw materials. Raw materials are requisitioned out of raw materials inventory and into work in process. Direct labor and manufacturing costs are charged directly to work in process. When we complete the manufacture or working on our products, we will transfer those costs from work in process to finished goods inventory. And again, once the finished goods are actually sold, we'll match those costs with revenues by reporting cost of goods sold. Let's do a couple quick checks. Let's assume beginning raw materials inventory was $32,000, and during the month we purchased $276,000 of raw materials. And at the end of the month, account showed $28,000 of raw materials was still present. What is the cost of direct materials used? We take our beginning raw materials inventory of $32,000, add to that our purchases of $276,000, which gives us the raw materials available for use in production of $308,000. If we have $28,000 left over in raw materials inventory, that means we must have used $280,000 worth of raw materials in production. Let's go ahead now and look at our total manufacturing cost for a period. If we have direct materials used in production of $280,000, direct labor of $375,000, and factory overhead of $180,000, then our total manufacturing cost for the period will be $835,000. This is simply the direct materials plus direct labor plus manufacturing overhead costs that we incurred during the month. Now let's take a look at our work in process account. Let's assume beginning work in process inventory was $125,000 and we incurred manufacturing costs of $835,000. If we have $200,000 of partially finished goods remaining in ending work in process, what was the cost of the goods that we manufactured during the month? Again, we'll take our beginning work in process of $125,000, add to that the $835,000 in manufacturing cost. Again, that's our direct material plus direct labor plus manufacturing overhead. That gives us total work in process of $960,000. And this work in process needs to either be transferred to finished goods or left in ending work in process. So we take our 960, and if we've got 200,000 left over, this means that the cost of goods manufactured, or the cost that we transfer to finished goods, will be $760,000. Finally, let's look at our finished goods inventory account. Beginning finished goods inventory was $130,000. Our manufacturing cost, our cost of goods manufactured for the period was $760,000. If our ending finished goods inventory was $150,000, that means our cost of goods sold had to be $740,000. Again, we take our beginning inventory, add to that our cost of goods manufactured. That gives us goods available for sale of $890,000. If it wasn't left over in ending finished goods inventory, then it must have been sold. So cost of goods sold was $740,000. Let's walk through a complete example. Lone Pack Products manufactures a variety of products in its factory. Data for the most recent month's operations appear to the right. Let's prepare a schedule of cost of goods manufactured for the company. Again, notice we have direct materials cost, direct labor, and manufacturing overhead. First, we need to consider the amount of raw materials or direct materials used in production. We do that by beginning with our beginning raw materials inventory, which we're told is $60,000. We add to that purchases, which gives us raw materials available for use of $750,000. We will either use these raw materials in production or they'll be left in ending raw materials inventory. We're told our ending raw materials inventory is $45,000. This means that we used $705,000 of raw materials in production. That's our $750,000 in raw materials available for use, minus the $45,000 in ending raw materials inventory. Now that we've calculated our direct materials cost, we need to add to that our direct labor cost, which we're told is $135,000, and our manufacturing overhead, which we're told is $370,000. Our total manufacturing costs for the period are $1,210,000. We'll take our total manufacturing cost for the period and add to that whatever our balance was in beginning work in process. In other words, what did we have on our factory floor at the beginning of the period? And we're told that we had $120,000 worth of partially completed inventory at the beginning of the month. So if we had $120,000 at the beginning of the month, and we added manufacturing costs of $1,210,000, that means that we have $1,330,000 worth of costs to account for. And those costs can either be left in ending work in process, which we are told is $130,000, or they will be the costs of goods manufactured, and that will be the cost that we are transferring out to finished goods. So we'll take our $1,330,000 in manufacturing costs, subtract from it our ending work in process to get our costs of goods manufactured. Let's go ahead and look at the same problem using a cost flow diagram. We're told our beginning raw materials inventory is $60,000. Our purchases were $690,000. And our ending raw materials inventory is $45,000. If we add together our beginning inventory plus our purchases, we get raw materials available of $750,000. That's the cost that either needs to be transferred out or left in ending work in process inventory. If 45 is left in ending work in process, that means $705,000 had to be transferred out because both sides of our box need to balance. Let's go ahead then and pick up our $705,000 in our work in process account. We were told our beginning work in process was $120,000. We had $135,000 in direct labor and $370,000 in applied manufacturing overhead. This means the total work in process cost that we need to account for is equal to $1,330,000. The left-hand side of our box needs to equal the right-hand side of our box. Since these two must be equal, and we're told our ending work in process is $130,000, this allows us to solve for our cost of goods manufacturing, which will be $1,200,000. Our cost of goods manufactured then gets transferred out to finished goods inventory.